Jim Handy from Objective Analysis is back to talk about what he expects to happen in the memory market during 2016. We do this every year, and I don't need to say that he's one of the most respected memory analysts in the world, but I will. And his videos are always insightful, and this is WeVision. I'm Dan Hutchison. Welcome to the program, Jim.
Oh, Dan, thanks for having me, and thanks for having me for so many years in a row.
Yeah, the only downside to us is that we get to compare what you said last year. Right? So,
Yeah.
so when we did this last year, what were some of your key points?
Well, I was certainly more optimistic than the way that the year turned out. I was anticipating to see full-blown shortages through 2015, resulting partly from NAND, 3D NAND, disallowing the business from keeping pace with demand. What we've had is in DRAM, we've had a demand shortfall. And this is something that doesn't really happen very frequently. But as a result, we haven't met the 25% memory growth that I was forecasting, or the 10% total semiconductor market growth. So it's been less of a year than I had hoped for 2015.
So is that being hit by the PC market being soft, or the smartphone?
It's both PCs and smartphones. The DRAM business has grown to become very dependent on both of those markets. Those are two very key markets for it. And so as a result, since both are soft, then the DRAM market has been weak. NAND, on the other hand, prices have been much more stable than they have in DRAM.
Yeah, well, the one thing you said last year was really true, is you said 3D was not here.
3D is still not here. And we'll see in a couple of slides how I don't expect it to be here for quite some time yet.
What about profitability?
DRAM manufacturers are still profitable. If we look at their quarterly earnings, they're still making money, and so that kind of says something about where we are with price versus cost. That there still is a gap between price and cost for DRAM, and so we haven't had the kind of a collapse that we would normally have if there were a real glut. Instead, it's what I would call a fragile balance, where the prices are going down, but they're not collapsing.
So if we kind of move on, let's talk about why it's different this time.
Yeah. So there are a few things that are different. One is that we do have this, what I call the fragile balance. The demand for DRAMs has actually slowed down, and that's something that doesn't generally happen. In your typical market, you have a very monotonic kind of an increase in DRAM demand, but we had that kind of softness in 2009 because of the 2008 global financial meltdown. We had something like that with the internet bubble burst in 2001.